Today we will discuss accounting for intercompany transactions. Alright, this is the last part of our three-part series for consolidation. Basically, intercompany transactions are transactions between the parent and the subsidiary. And we know, from the consolidation point of view, the parent and the subsidiary are one. Therefore, our goal should be to eliminate all intercompany transactions. An example of this is dividends declared by the subsidiary and received by the parent. Naalala nyo yung entry number 4 natin. This is our working paper entry to eliminate the intercompany dividends. Therefore, after this entry, hindi na nag-reflect yung dividends in the consolidated financial statements. So that's our goal for intercompany transactions. But we will expand this to intercompany sales or inventory. We'll also discuss what if depreciable asset and what if non-depreciable asset. Alright? Now, the key thing here in intercompany transactions is this one. You have to know if the transaction is a downstream transaction or an upstream transaction. Sir, what do you mean by downstream transaction? When the transaction originated from the parent to the subsidiary, we call it downstream transaction. When the transaction originated from the subsidiary to the parent, we call this an upstream transaction. Sir, ano yung relevance yan? Okay, dun muna tayo sa downstream transaction. Since the parent is owned 100% by the shareholders of the parent, the downstream transactions, hindi mo siya i-allocate to parent and NCI. So 100% will go to the parent, 0% will go to the NCI. On the other hand, for the upstream transaction, since the subsidiary is owned by the parent and the NCI, all upstream transactions should be allocated to the parent and the NCI. Let's say 80% and 20%. Gets? If downstream transaction, no allocation. If it's an upstream transaction, you allocate to the parent and the NCI. To better understand this, let's go to our problem for today. Okay, let's see the questions. We're asked to compute for the consolidated gross profit, consolidated net income attributable to parent. Again, if it's attributable to parent, kung ilang percent owned lang ni parent, right? And last one is NCI in net income, or the NCI share in the net income of the subsidiary. Okay, let's read. On January 1, 2019, Super Company acquired 90% of the outstanding shares of Hero Inc. at book value. Super and Hero.
Can I be your superhero? Superhero.
Okay, it's at book value. It means the fair value and the book value are equal. Okay, yun yung implication yan. During 2019 and 2020, intercompany sales amounted to 2 million and 4 million respectively. By the way, whenever we encounter any intercompany sale, i-add natin siya dito sa working paper entries natin. Okay? Itutuloy lang natin siya. So, let's see. Okay. During 2019 and 2020, intercompany sales amounted to 2 million and 4 million respectively. Super Company consistently recognized 20% markup based on sales, while Hero Inc. had a 25% gross profit on sales. 20% markup, 25% gross profit on sales. Super is the parent. Am I right? Okay, this is the parent. And then si Hero naman is the sub. Okay? The inventories in the buyer's books, which all came from intercompany transactions, show. Okay, so Super and then Hero 2019, this is 2020, tama ba? This is your beginning inventory, this is your ending inventory. Okay, now tama ba nangyari dyan? Sabi dyan, these are the inventories in the buyer's books. It means yung 240,000 and 160,000, ang bumili niyan is Super, right? It's a parent. Meaning, the 240,000 and the 160,000 came from whom? it came from the subsidiary, right? So it means the 240 and 160,000, this is an example of an upstream transaction. Does that make sense? On the other hand, since nasa books naman ni Hero to, which is the sub, yung 140,000, galing siya kay parent, right? If galing kay parent, the transaction is an example of a downstream transaction. Okay? So ano nga ba ulit yung importance of upstream and downstream transactions? Downstream, no allocation. Upstream, you allocate both to NCI, parent and the NCI. Alright? Now, let's do the entries for, eliminating entries for the beginning inventory and ending inventory. Okay, so tuloy natin siya dito. Natin siya lalagay. Dito na lang. Entry number 5. Okay, intercompany sales. Separate natin na, lagay natin inventory. Okay, beginning and then ending. Okay, beginning inventory. Okay, working paper entry for beginning inventory is debit retained earnings beginning, and then we credit cost of goods sold. Okay, and then working paper entry for the ending inventory naman, because this happened this year. Okay, we debit sales, we credit cost of goods sold, we credit inventory. Okay, this is your working paper entry for the ending inventory. Now the question is, sir, how much yan? Okay, yung amount nito is equal to the markup, okay, to the gross profit. Okay, dito natin siya ilagay. Basta ito yung pro forma entry, gawin natin siya ulit dito. Okay, so compute muna natin yung markup of these inventories. Okay, let's start with the beginning inventory. 240,000. Sino ulit yung nagbenta niyan? It came from Hero the sub, and Hero has 25% gross profit. Okay, so 240,000 times 240 times 25%, 60,000, right? Okay, this is 60,000. And then for the ending, 160,000 times 25%, you get 40,000, right? Okay, this is 40,000. So ano ulit yung 60 and 40? Basically, yun yung markup. Yun yung kailangan nating i-eliminate. Am I right? Okay. Because nagbenta si sub to the parent with a markup. O dapat walang ganun. Tama? Because iisa lang sila, you have to eliminate the markup. You do that as well for the subsidiary. So 100,000, in this case naman, si Super, which is the parent, recognizes 20% markup. So it means kailangan 20% niyan tanggalin natin. 100,000 times 20%, this is 20,000. 40,000 times 20%, this is 8,000. Can we get a total? 48,000 for the ending inventory, and then 80,000 for the beginning inventory. Gets? Okay. So, ginawa ko lang, tinanggal ko yung markup. Pero be careful lang, baka ibang markup yung magamit mo. You use the markup of the seller. Okay? Yung seller. Now, sige nga, i-reflect natin yung entry natin, yung working paper entry natin, the beginning and ending to this. Okay, beginning muna. So, lagay natin dito yung entry. Debit, retained earnings beginning, credit cost of goods sold. Okay, how much? Total beginning inventory natin is 80,000. 80,000. Okay? For this one naman, entry for the ending inventory, debit sales, credit cost of goods sold, credit inventory, yung net amount niyan, hindi ko nalalagay specifically yung amounts for sales, cost of goods sold, inventory, but the net amount is 48,000, which is equal to the markup or to the gross profit. Am I right? Okay. This is our entry for working paper entry for the beginning and for the ending. Okay, let's move on. On October 1, 2020, Hero Inc. purchased a piece of land costing 1 million from Super Company for 1.5 million. Hero Inc. Hero is the sub, purchased a piece of land costing 1 million from Super. So the land came from the parent. Am I right? This is an example of a downstream transaction. Yun muna. So identify muna, is it a downstream or is it an upstream transaction? And in this case, yung cost lang niya is 1 million but binenta niya for 1.5 million. Means there's a gain of 500,000. Right? Yung gain of 500,000, we have to eliminate that because again, the parent and the subsidiary are one. Dapat hindi ka mag-profit from each other. Alright? Tatanggalin natin siya later. Actually, pakita ko na pala yung entry. Entry number 6. This is a non-depreciable asset because it's a land. We have, in this case, may gain, di ba? Tatanggalin natin yung gain. Debit gain, credit land for 500,000. Okay, so, lagay din natin siya dito. Debit gain, dito na lang. Debit gain, credit land, 500,000. Alright. On the other hand, on July 1, 2020, Hero Inc. sold an equipment with a carrying value of 60, remaining life of 3 years to Super Company. So, si Hero? Hero is the sub, Super is the parent. Galing kay sub, this is an upstream transaction, right? And in this case, anong nangyari? Carrying value of 60, binenta for 42. There's a difference of 18,000. This is a loss. Am I right? This is a loss. Okay. We have to eliminate this because it's an intercompany transaction. Entry number 7 for a depreciable asset. Loss siya, di ba? Kailangan natin i-credit yung loss. We debit equipment. Okay? Don't forget that anong nangyari dito, since naka-record na siya on July 1 at 42,000, din-appreciate niya yan based on 42,000, not at 60,000, right? You have to further depreciate kasi under-depreciated siya, right? Yung basis mo is lower, 42,000. You have another entry, debit depreciation, credit accumulated depreciation. Alright, so this is our complete entry for a depreciable asset. Siyempre, it's the other way around if gain, okay? Opposite lang yan. Okay, shout out to the Bakal Boys, Kev, Gab, Pau, Busto, Ian, Francis, Kelvin, and to my favorite student with 100% attendance online, Stally Chan. Grabe, todo support sa akin mga yan. Mr. Accounting muna, then Brad Fit during study break. Buhat tayo soon afterwards, Bakal Boys. Okay, separate statements of comprehensive income for the two companies for the year 2020. Okay. We have here the sales, cost of sales, gross profit, OPEX, okay, net income for the parent and the sub. Alright. Compute the following amounts. So, December 31, 2020, consolidated gross profit. Let's start with gross profit. How do we compute that? Okay. Gross profit, 100% gross profit, ibig sabihin yan. Tama? When you say consolidated gross profit, 100% gross profit. We get the gross profit first of the parent. How much yun? 10 million. Tama? The gross profit. For the sub, 5.6 million. Write it down. Gross profit, parent, 10 million. Okay, 10M. Gross profit of the sub, it's 5.6 million. Do I need to multiply this by 90%? Answer is no, because the question is gross profit. It's always 100%. 5.6 million. Okay, what else? What will affect our gross profit? Our beginning and ending inventory. Okay? Beginning inventory natin, as you see, yung entry natin here, we're crediting cost of goods sold. Okay? 80,000. If you're crediting cost of goods sold, it means binabawasan mo yung cost of goods sold. Therefore, the effect of the gross profit is higher. Tama? So, for the beginning inventory, 80,000. We add 80,000. Okay? For the ending inventory, we're debiting sales. Okay? We're crediting COGS. We know sales are higher than your COGS. Tama? It means yung effect niya sa gross profit is a decrease. Tama? Amounting to 48,000. Ending inventory minus 48,000. Alright. Let's compute. 10 million plus 5.6 million plus 80,000 minus 48,000. What? 15, 6, 32,000. Okay, 15, 6, 32,000. This is our consolidated gross profit. Class, if you appreciate this free accounting tutorial, don't forget to subscribe and turn on the notification bell so you get notified whenever I have a new video. Letter B. Consolidated net income attributable to parent. Ayan. If it's attributable to parent, in our problem, it's only 90% gets of the subsidiary. Okay? Let's see. We're given the net income of the parent, 4 million, and the sub. Start with the parent muna. Net income of the parent, syempre 100% yan kasi 100% owned siya by the shareholders of the parent. 4 million. For the sub, net income of the sub, let's see. 1,822,000. Dapat 90% lang, tama? 1,822,000 times 90%. 1,639,800. 1,639,800. What else? Okay, because this is consolidated income, kailangan naka-reflect na dyan lahat ng working paper entries natin for intercompany transactions. Right? Okay. Unahin muna natin yung mas madali. Let's first do yung entry for the land. Di ba may gain tayo? Tama? Na in-eliminate. So, for 500,000, right? Okay. And this is a downstream transaction. Tama? When it's a downstream transaction, 100% will go to the parent. Therefore, yung adjustment natin here for the gain is minus 500,000. Hindi natin siya i-multiply by 90% because, again, this is a downstream transaction. Right? Okay. Next. Okay na tayo sa land. Let's go to the equipment or the depreciable asset. We know there's a loss of 18 and this is an upstream transaction. Tama? If it's an upstream transaction, 18,000 times 0.9, we get 16,200. Loss, 16,200. Kailangan nating eliminate siya, right? Di ba yung entry natin for that one is we're crediting the loss. Add 16,200. Okay, refer to this. Di ba? Nag-credit tayo ng loss. Tama? Don't forget the related depreciation. Bakit nga ba ulit, sir? Because nag-depreciate siya based on the 42,000 but it should have been based on the carrying value of 60. Therefore, kulang siya ng 18,000 divided by 3 years. And don't forget, nangyari yung transaction on July 1, which is at the middle of the year. Okay? We get the difference, 18,000. We divide by 3 because yung useful life times 0.5. Okay? It's 3,000. Alright? And because this is an upstream transaction, don't forget to multiply this by 90%, 2,700. Okay? Depreciation, 2,700. Siyempre, kulang yung depreciation natin, di ba? Again, yung base mo is smaller, 42,000. Therefore, minus 2,700. Another way to compute this is you just get the loss of 16,200. Tama? You divide by 3 because useful life of 3 years. And then you multiply it by 0.5 because July 1, you get 2,700. It's the other way around if it's a gain. Okay? Next. Siyempre, yung inventory natin. Tama? Let's start with the beginning inventory. Okay. So, ang gagawin natin now is identify natin alin yung upstream, alin yung downstream. Actually, nagawa na pala natin siya. For this one, the 240 or the 60 and the 40, upstream sila. The 20 and the 8,000 is the downstream, right? Okay, let's start with the beginning inventory. So, beginning inventory, we have an upstream, we have a downstream, right? So, yung upstream dito, it's the 60,000. Is that correct? Okay. And ano ba yung effect nung beginning inventory natin, working paper entry, to the net income? Well, we're crediting cost of goods sold. It means beginning inventory increases your net income. Working paper entry for the beginning inventory increases your net income, right? So 60,000, but don't forget to multiply this by 90% because it's an upstream transaction. 60,000 times 90%, 54,000, we add plus 54,000 gets. Okay. Now, this 20,000 is a downstream transaction. And again, nag-increase siya na net income. Hindi mo siya i-multiply by 90%. You multiply it by 100%. Therefore, this is plus 20,000. Alright? Let's do the ending inventory. Meron ka ding upstream and downstream for the ending inventory. Okay, 40,000. And based on our entry, the working paper entry for ending inventory decreases your net income. Okay, yung 40,000 na yan is an upstream transaction. 40,000 times 90%, 36,000 minus 36,000. And the 8,000 here is a downstream transaction. Again, decreases sa net income. If it's a downstream, no need to multiply by 90%. Lahat yan kay parent minus 8,000. Okay, easy. Okay, we can now compute for the consolidated net income attributable to parent. 4 million plus 1,639,800 minus 500,000 plus 16,200 minus 27. Okay, plus 54 plus 20,000 minus 36 minus 8,000. You get 51,83,300. Okay. Our consolidated net income attributable to parent 51,83,300. All right. And then last item is NCI in net income. NCI share in net income, letter C. Okay, how do we compute this? Well, meron siyang share sa net income ni sub, right? Ilang percent ulit? 10% because 90% owned siya by the parent. 10% of 1,822,000, that's 182,200. Okay. What else? Don't forget to consider all upstream transactions. Yung downstream, we can ignore them because kay parent lang siya, right? All upstream transactions dapat may effect din kay NCI. Okay. Yung land is a downstream, so ignore. For the equipment, it's an upstream. Okay. So yung loss natin, tama ba? Yung loss natin ay 18,000 times 10%, 1,800. Okay. Again, yung loss, it's a positive adjustment. Plus 1,800. Okay, 1,800 divided by 3, that's 600, times 0.5, that's 300 for the depreciation. Tama kasi 2,700 kay parent. Okay, kay NCI naman, this is 300. Alright, what else? Don't forget your upstream. Tama, may upstream ka dito. 60,000 for the beginning inventory times 10%, that's 6,000. And we know beginning inventory, positive yung effect niya to the income, okay, for the working paper entry. And ending inventory, 40,000 times 10%, that's 4,000. Negative adjustment naman yan. Ending inventory, negative adjustment of 4,000. We compute the NCI's share in net income, 182,200 plus 1,800 minus 300 plus 6,000 minus 4,000. We get 185,700. Okay, 185,700. Final answer for NCI share in net income. Last is the end of this free tutorial. Patikim pa lang yan. What if binenta na to outside party yung intercompany sale of depreciable and non-depreciable asset? What will be your working paper entries? How do you account for loss of control? How about the consolidation? Tuturo namin lahat yan. At Pinnacle, regardless of your accounting background, we will provide you with the most efficient and effective review by focusing on best review strategies, key points to remember, shortcuts, common tricks, and mistakes. For reservation and to know more about us, visit our website and Facebook page. All the links are in the description below. Reserve now because we only accept limited number of students in order to preserve the quality of our review. Class is missed. See you next week.